Hello there. Now, for those of you that have been following my channel for the last couple of years or so, you'd have seen that I've done loads of videos covering multiple topics in all areas of trading. And I was lying in bed this morning and I was in a bit of a quandary as to what topic I should cover in this week's video. Anyway, got to my desk as usual, fired up my screens and went straight into the Forex Signals website. I always start my day by doing this, and I always start my day by going straight to the messages that have been left overnight. And two struck out to me, and I want to just share them with you now. First one is a I don't know if it's a male or female. It says Pips the Way from Sweden. It says, "Hi Andrew, love your YouTube videos and finally decided to take the plunge and join your community. So pleased I did. I can't wait to start. First question, what time frame should I start on?" Second one was from a guy called, I presume it's a guy, it's Clive B from Australia. Just says, "Help! I've been trading 5 and 15 minute time frame for about 6 months, day in, day out. I failed to make a profit. I'm losing not only my money, but also my days at the screen. What should I do?" Well, thank you, Clive and Pips the Way, for helping me solve my quandary today, because that's what we'll talk about. We'll talk about the best time frame to use when trading the Forex market. Okay, so as I mentioned in that short introduction, we've done multiple videos in the last couple of years or so, covering all aspects of the market. If you haven't already subscribed to the channel, I suggest you do so. That way you can access all the videos in one spot. Now, if you hit that little bell notification, also, you're going to be notified the moment my next video has been released. Don't forget to follow us on Instagram and indeed on Facebook. If you follow us on Facebook, you can join me live every Monday, 2 p.m. London time, where I discuss trading opportunities for the week ahead in a live environment. You can interact as well. Okay, let's get on with it. Okay, so before I get into this subject, let me first of all explain, for those of you that are not quite sure what I'm talking about here, what a time frame means. When we're trading the financial markets, we generally look at charts to see what price has done in the past to give us an idea what prices may do in the future. And when we're looking at charts, we normally look at them in 3 different formats. Either a candlestick chart, which are something like this, I'll explain in a moment what they are. You've got a line chart, which is basically the closing price, or you might have a bar chart, which will look something like that. But in the case of a bar chart and a candlestick chart, it's basically the same. Each candlestick or each bar represents a period of time. So for example, if we're looking at the daily chart using a candlestick, each candlestick represents price action in that particular time period. So a candlestick will show us where the market opened and where it closed, and if it closes higher than where it opened, it's normally coloured blue or green. It shows you the high and the low. So this candlestick, this one candlestick, shows us all the price action, lots of information in that one day. Normally runs from New York close, 5 p.m. New York to 5 p.m. the next day, but some brokers differ in that. So again, on the candlestick here, you've got the open here, the low here, the close here I should say, the low here, the high here. That's basically the price action in one day. But when we're trading, looking at charts, we don't have to look at just what happened in one day. We can drill down. We can drill right down to even 1 minute. We can drill right out to 1 month. If you're looking at a 1 month candlestick, that would basically represent what the highs and the low were in that month. Let me explain a little bit further. Okay, so what we've got here on the board are 4 15-minute candles for this example. So this is a 15-minute chart. Each one of these candles represents price action in that 15-minute time period. Remember, green candles are for closing higher than where it opened, and red candles are closing lower than where it opened. So for this example, we've opened here, we've traded up on this 15 minutes, and then indeed we traded up again on the following 15 minutes, hit this high up here, okay, and then we traded down, and then the final 15 minutes we closed back down here. So this is price action on each individual 15 minute. But you may want to look at just the hourly candlestick. Here there are 4 15 minutes. That can be represented on the hourly chart. Shows exactly the same information but not so much detail. So for example, we've opened here, so you'd have the open there, basically where the open is here, so that will be the open there. We've closed lower than where we've opened. You see here we've opened and then we've closed lower, so it'll be a red candle, so the close is down here to correspond with that close. And of course we had a high up here. So this hourly candle here represents the same information that you see on the 15-minute chart, but that just shows you more detail. So that begs the question, do you want to be trading with much more detail, or are you that bothered about all these individual price swings within that higher time period? As I say, that begs the question, which is the best time frame to use? Now the answer to this question, which time frame to use, is a bit more complex than you may think. I'm not simply able to say to you, you should be trading the 5-minute or the 1 hour or the daily, one's more profitable than the other, because that's just not the case. The reason why it's not the case is because everyone's personal circumstances and objectives are different. You may have a day job and you may have only limited amount of time to spend in front of the screens, maybe less than an hour a day, in which case, you're looking to be trading maybe off the higher time periods, maybe the daily or the monthly. Remember, when you're trading off the daily or the monthly, the amount of trades you take over the course of the month will be a lot less. They'll be few and far between. On the other hand, you may have plenty of hours throughout the day to spend in front of the screens looking for those opportunities. You therefore may be able to take 5, 10, 15, 20 trades a day, often referred to, of course, as scalping. So you're looking to exploit your trading edge over a large number of trades. You might be looking at the 5-minute, the 15-minute or the hourly chart. Now, also your objectives, very, very important. You may be looking to grow an account over a longer period of time, to pay for retirement perhaps, or your school fees, in which case you may want to avoid all this noise of the lower time periods. So you'll be looking at the weekly and the monthly time periods. Of course, the trades will be few and far between, but you're looking to do this over a longer period of time. Now, you may look to trade full-time to get a monthly income, in which case you need to make regular profits on a monthly basis, in which case you might be trading the smaller or shorter time periods like the 1 hour, the 15 minutes and so forth, grinding out your edge over multiple trades, taking a monthly income. So the 4 hour, as I say, 1 hour and 15 minute might be preferred. The one thing that all these objectives have in common is the desire to make money, right? That's why we're here. But for me, the deciding factor on which time frame to use comes down to one factor, and that's the psychological side of trading. Now, we all know that psychology plays a huge part in trading, and quite frankly, it's the bad psychology that's the killer of most trading accounts. Now, trading the really short time frames, buying and selling off the 15-minute, the 5-minute, the 1-minute time period can be very emotional. Seeing money go in and out of the account is emotional, and money is an emotional commodity. There's lots of noise down there, and sometimes you can get caught up in all this noise. So I strongly suggest, if you're new to trading, leave all that noise to the more experienced trader. I mean, trading after all has its own challenges, so don't make it even more challenging by increasing your emotional involvement on the shorter time periods. So take a step back and trade off the higher time periods, the 4 hour or the daily. Sure, it's not going to be as exciting as a 5-minute chart, but honestly, if you're looking for excitement, you're going to be far better off going to, say, the horses or something like that and losing your money. At least then you're going to be with your friends having a good time, far better than sitting at home on your laptop. Once you've proved yourself and your skills as a trader, then and only then should you be looking to trade the lower time periods. This is purely my opinion. And finally, of course, you've got to consider the actual strategy itself. Now, here at forexsignals.com, we talk about and trade live varying strategies, from the swing trading day strategy down to the 5-minute scalping strategy. We've got strategies for all conditions and all levels of trader. So make sure you check those out if you haven't already done so. But make sure the strategy you're using is optimized for that particular time period. So, Clive and Pips away. I hope I've gone some way to answer your questions today. Clive, you're struggling on the 5 and 15 minute. I suggest you drill back up, go back to the daily, see how you get on there, stop bleeding money from the account. I'm sure you'll find that a worthwhile endeavour. And Pips away, you're new to trading, so welcome to the room. I suggest you start by looking at the daily, see how you get on there, and then we can discuss moving down to the intraday time periods should you have some success there. As always, if you've enjoyed the video today, give me a thumbs up. If you haven't, give me a thumbs down. Don't forget to leave a comment. I'll get back to as many as I can. Don't forget to subscribe to the channel if you haven't already done so. And that bell notification highlights when I've released my next video. Follow us on Instagram and of course Facebook. If you follow us on Facebook, I'll see you on Monday, 2 p.m. London time, where we trade and review the markets for the week ahead. Happy trading and good luck.